Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
So now guys, let's take a look at the gold market as usual. So retracement that we discussed recently started. You can see the minor pullback stance on intraday charts, market after the breakout and entering the new trading range as we discussed recently, now showing the minor pullback. So to keep the bullish context purely, market preferably should not drop out of this trending range. So I do not want to see that market is dropping back inside of the previous consolidation. This will be a bit bearish, so maybe it will not destroy the upward action, but it definitely could lead to the deeper retracement, which will be mostly the same as the breaking of the short-term bullish context. Later it might be some kind of the greater ABCD pattern, but that will be absolutely different story. So it will be another context, another patterns, so it will be different. So currently, to keep the current pace and current bullish context, market should stay inside of this new trading range, aiming to our 1828 target or 1825, 6 LP on intraday charts, and this resistance cluster. So what will happen next, we will see. Currently, let's keep watching what will happen around this area. On the 4 time frame chart, you could see that currently market behaves, well, accurately and properly to the suggestion that we have made. So we said it will be nice if market with the retracement will be able to stay at least above the range that has been broken, and it could retest the previous tops in the flag consolidation. But in case if market will drop back inside of the flag, that will be a bit warning sign. So it's not very good. So if you're planning to take the long position on the gold market, currently is the most comfortable point. Of course, we have some risks on the horizon with the Wyoming announcement results, some statistics, but the attractiveness of this point is that here your risk will be minimal because you're taking position on the retracement and invalidation. Market stands in the closest point to invalidation area. So, particularly speaking, let's take a look on the hourly chart. We see retesting of this previous top, this pullback, retesting of the upper border of the previous consolidation. Here's probably some area between the 50% and first level 1795. So in general, this is 1795 support area. Right below the market, we have the confluence, 1783 and 1789 area. So I will show you from what lows we would use the levels. So first level is from the same, right from this low to the stop, 618 support. This 3% support is the starting point right from here when this major upward action has started. So this is important reaction point that creates the support around 1783. So this is a kind of the invalidation area. So if market will break below it, that will tell you that short-term bullish context has failed and market has failed to stay inside of this new trading range. In this case, probably deeper retracement stands on the horizon. It means that here, well, you have different options where to place the stop order. So in particular, you, for example, could try to place stop right below these lows. This also will not be the mistake because, well, if market will break it down, it also tells you that market wasn't able to stay here and just trying to move in lower. But to place stop somewhere below the confluence, it's a bit more solidly because it's a strong level and you give market some room to breathe in this range around this top that is forming here. So if market will fluctuate within $5 in this range, 1790, 1795, this will not be some criminal action. So this is normal. And placing stop somewhere below the confluence, you provide market the room to fluctuate, to breathe. So placing stop right here, well, theoretically it is possible, but it's just tightening the market in very tight range and with some spikes on some rumors and news concerning from the market, it could just occasionally be washed out on this trading opportunity. So that's what we have currently on the gold around the trading process and possible position taking. The target is mostly stands the same as we already discussed, the CBCD patch and XOP 1825 area, as market should proceed higher once it stands inside the range, the new range that we have discussed. Alternatively, how you could also consider taking the long position. So if you it is too far to you place stops right here, there's a really big difference here, you could drop your time frame and watch for the patterns. So for example, you could drop to the 5-15-minute chart or even 5-minute chart and watch for the pattern. So here definitely you could see kind of the hand and shoulders is forming or something of that sort. And you could try to make your enter based on this pattern. So for instance, the bottom of the right arm should be somewhere around 1794. And if you, for instance, taking the position here with the placing stops below the head, that when you're just building your trade upon the particular pattern. If pattern fails, you just do nothing, wait for the next one. But in this case, your loss will be very small. It's approximately $3 per contract, so it's very small and acceptable for most traders, whatever assets you have on your trading account. So that's another approach that you could take here for positioning. That's actually two ways how you could act, either with a particular pattern or just basing on the support areas that you have around the current situation. So let's see what will happen next. Currently, with this gold performance, we do not see something that breaks our analysis. Market right now stands at an important area, and in a few sessions we should understand whether indeed it will start upward direction to the target, or we should have to searching for another context for trading.